Hello, everyone, and thank you for joining us for another episode of our Ask Me Anything Side series hosted by Side. I'm Brian Smith, VP of Agent Partnerships for Side. Joining us today is an internationally recognized expert and thought leader in real estate tech, Mike DelPrete. You may have seen Mike's Real Estate Pandemic Survival Guide, or you may have caught one of his regular keynotes at Inman events. Before we get started, I want to thank everyone who submitted their questions in advance. We'll do everything we can to cover many of those questions throughout the discussion today. And without further ado, welcome, Mike, and thank you for taking time to share your data and insights with the Side community today.
Yeah, thanks for having me, Brian, and hello, everyone. Thanks for joining.
Absolutely. So let's talk about data a little bit. You've recently released the Real Estate Pandemic Survival Guide, which, by the way, for anyone that has not seen it, within about 45 seconds of the YouTube version of it, Mike uses some amazing visuals aids that I found very useful. So, Mike, if I was your audience, then let me say you nailed it with those visual aids.
Great. Thank you. I appreciate it.
Absolutely. Okay. Would you mind giving us a quick overview of the report for those that may not be familiar with it? And if it makes sense, double down on anything that may have changed since you published the report.
Yeah. So I actually have one of the visuals here. I'm gonna pull it out soon, so you guys will see it. But I mean, the idea behind this is there's so much. I'm a data guy. I've been tracking data and disruption and what's going on in real estate, trying to just really understand, what's occurring, and with that understanding, be able to predict what might happen in the future, or at least give people a good sense as to where we currently are, so they can kind of strategize and plan their business. And in the past, that's looking at disruptive models, it's looking at iBuyers, looking at everything. Now, with the pandemic and coronavirus, there's clearly a big change happening, right? All this stuff is happening. It is a very big unknown, and it's affecting the world and the real estate world in different ways. So what I've been trying to do and zooming in on in terms of data is looking at what's happening to different real estate markets around the world. Because this is all staggered, right? And things are happening in different locations at different times. So things started in China, and then you have South Korea, you have Italy, then UK, Germany, France, Spain, and the US. So all these markets are kind of at different parts of the curve. And this is the illustration I used from the webinar. You should check it out if you haven't already, right? But if this is kind of number of real estate transactions, everything's fine. Pandemic hits, we go into lockdown, things drop. We stay at the bottom for a while, and then there's a recovery. And what I'm trying to understand are these three red arrows. What does the drop look like? How long are we at the bottom? And what does that recovery look like? People talk about a U-shaped recovery, V-shaped recovery. The latest data I have, I just sent it out this morning, and I can pull up some stuff later, is I'd say it's a checkmark shaped recovery, right? It's very quick. We last down there for a couple of weeks, and then it's the slow, gradual incline over there. So fundamentally, that's kind of what I was trying to do, right? Look at data from around the world, look at these first markets that were hit, both overseas and here in the US, like New York, Seattle, San Francisco, get a sense as to what's occurring, to just be able to prepare everybody for, this is kind of what could happen. So now you have some of the info and the data.
Great, fantastic. And thank you for some of those visual aids that I was talking about. That's exactly what I was speaking of when I said you were speaking to me as an audience.
Sure.
Fantastic. Any insights more relevant or closer to home here with respect to maybe California or Texas markets?
Yeah, let me, I'm going to share my screen. So if this is this curve, right, and kind of understanding this, what I've seen from looking at all this data is this drop occurs. It's very severe. It happens within a week. Typically the markets bottom out for maybe 3 to 4 weeks, and then recovery occurs. So it's kind of what we're seeing right now. But in terms of the latest data, so up in Seattle, Seattle was one of the first U.S. markets hit. The lead indicator that I'm looking for is number of new listings coming to market. I think that's the best way to kind of encapsulate what's happening, because transactions that are closing today have been in the pipe for 1-2 months. You could look at other metrics as well, but I think new listings is the one to focus on, and that's where I've been looking. So you can probably see my cursor as well, but you look at the year-over-year number of new listings in King County, Washington, which is where Seattle is. you can see kind of, this is where lockdown occurred, shelter in place, right? It's very natural, and then it just cuts off. So that drop in new listings down kind of 50, 60%. Again, there's that 1 week drop, and then we're at the bottom of the market for kind of 3 to 4 weeks. And then you see a bit of a recovery, actually. King County has recovered in the past week or two. So that's kind of promising, right? It showcases that check mark type recovery that I'm talking about. This is the Bay Area, no, East Bay. Data from a group called Red Oak Realty. You can see, again, the year over year, right? It's kind of perfectly illustrated. Orange is this year. Within the span of a week, new listings dropped 70%. We're kind of at the bottom for 2 to 3 weeks, and then a bit of a recovery. That recovery is not going to bounce right back up. I mean, I think it's going to be quite gradual. And you will have seen that if you look at that pandemic survival guide, looking at the data out of China, it's very much a slow recovery process. What else do we got here? A couple other kind of secondary markets that weren't hit first, but were affected nonetheless. So Portland, a bit of a decline in new listings on a weekly basis, but what you see here really is the lack of a seasonal uptick. Last year, spring, new listings kind of flooded the market. We're not seeing that here. So there's about a 40% year over year decline in new listing volumes. And I would say it's still at the bottom. There's not really a sign of recovery quite yet, but I would expect in the week or two to come that we'll see it. And then another secondary market, Austin. Again, if you look at the blue line, no real drop in week-on-week listing volumes, but if you compare it to last year, the gray line, you see again that 30 to 40% drop in new listing volumes from last year. Perhaps the first sign of a recovery here, but I think we need kind of a week or two more of data to see that. So I'll just stop sharing. I mean, hopefully that answers the question, Brian. I think every market is different. I think the nature of that check mark is similar, but how deep it goes, how long it lasts, kind of changes market to market. And if you look at New York City, I didn't show that graph. That's still in the bottom. It's been bottomed out, down 90% for kind of 5 weeks now. So it correlates strongly to the severity of the lockdown, right? Some states it's real estate is not essential. You cannot do that. That's going to be kind of New York City, Michigan, Pennsylvania are the big ones there.
Yeah, absolutely. So I think that did address the question very well. It's a nice intro. So, as we've been in some might even say, an overheated market, it's certainly been a long run to the market. And people have asked, and I guess I'd have to ask you, do you agree that the markets in particular, maybe even the high-end markets have been looking for a bit of an excuse to slow down a little bit or trend down? I don't know is the short answer. I think everybody's got an opinion on that. I'm not sure, where I would put that. I prefer to look at data. So I prefer not to speculate. Fair enough. Well, let's move direction a little bit toward the impact that we're having in these times, right? And we know that one of the areas of impact is massive unemployment. So as that kind of plays out through the housing market, how do you see that affecting things over the long term a little bit?
Yeah, that's the big unknown. I think everything that I've been talking about is looking at this kind of just the effect of the pandemic. And, in the past, Zillow's done some research on the effect of SARS in Hong Kong in 2003. And you kind of get this, everything looks the same, right? It's kind of, you're dropping 50 to 70% for a period of time, and then there's this 6 to 9 month recovery. If all we were talking about was a pandemic where you have social distancing and real estate kind of pauses, I think it would be similar. But what's happening now is this 1-2 punch. That's the first one, but the second one is the economic uncertainty. How does the market react to 22 million unemployed people? With the price of I just heard this a little while ago, the price of oil, dropping to an all-time low and negative numbers. What happens to Houston, right? I mean, there's all these really significant economic questions. For me, I know, Guy wants me to speculate here, but anybody who says they know what's going to happen is clearly just, they don't. Nobody knows what's going to happen. This is happening on a daily basis. I think, I'm probably somewhere in the middle. I don't think it's the end of the world, and I don't think everything is going to be fine. It's something in between. I don't know what's going to happen to house prices. And anybody who does, they just, just take that with a grain of salt. Like, nobody can know yet. There's so much uncertainty. There's so many cards that have yet to been played here. I think we really just got to take it one step at a time, one day at a time. And the data that I've talked about, the data that I'm showing is like where we are as of this morning when I put that together. That's what we know, right? We're looking at volumes. Over the next couple of weeks, we'll look at what the recovery looks like. Hopefully we'll start getting some early signals on pricing. Hopefully when restrictions start easing up, we'll get some early signals on buyer demand. I will say this, actually, a correlation for buyer demand would be port activity on the portals like Zillow. And so I've been tracking data out of the top portals here in the US. Also internationally, I'm very close with a number of international portals. And, what I can say is just general browsing activity took a big hit, kind of down 30 to 40% in some markets, but it's almost all recovered. So people are back online, whether they're probably just stuck inside and bored and looking to see what's going on. The next kind of lead indicator down the funnel there is leads, buyer leads. And same thing, those buyer leads dropped on Zillow kind of down about 30%. In overseas markets, I've seen them drop 40 to 50%. They've plateaued, and I think in some places they are starting to come back as people fill out a form, right? I have questions about this house, or I want to do a video tour, or whatever constitutes a buyer lead, in these days. It is coming back. So I think, those early lead indicators have recovered. And I wouldn't say, buyer activity is down or soft or anything like that. I think people look around, they're like, maybe now is not the right time to buy a house. But that doesn't mean it's not going to be the right time in 3 months or 6 months. So starting to see that activity. But, back to my point, I think we're just going to have to wait and see. This is where we are right now. And I think over the next couple of weeks, the stuff is changing so fast, we'll get more information on that.
Right. I think that's great information. And of course, we're not going to hold you to anything, as you well stated. Like, no one knows what's going to happen, right? We're all taking our best guess at things based on the information we're seeing before us. But I do appreciate you providing some level of guidance. I think you go a little bit further than the average person presenting data to give some insights to what you might expect and might to see. And, we're not going to hold anything against you unless you just happen to be right. So know that moving forward. Okay. So thank you for that.
Yeah.
With respect to agents and agent production and pipeline, it sounds like looking at the leading indicators around the portals, around the decrease in activity, maybe decrease in buyer leads, that sort of thing. Is it fair to think that that'll be a direct correlation in terms of agent pipeline and production?
Yeah, a lot of the numbers that I was showing was new listings. A new listing needs to come to market for a transaction to occur. And the delta in new listings, if new listings are down, 10%, 20% in a month or a year, there's a drop of 10 to 20% in transactions and commissions paid out. I mean, that's entirely kind of the whole point of this. Mm-hmm. A couple weeks ago, 50% was my number. If we look at total transactions in 2020 nationally compared to 2019, I was guessing they could be down 50%. Which is similar to predictions out of the UK, which is a different market, but it's a data point, and it's similar to what some of these hard hit markets are seeing. I would say that based on the latest data, that'd be at the high end of my guess. I could see it being lower, 40, 35%. And again, that's national, right? Not all markets are created equal, and what happens in San Francisco is going to be different than Seattle, different than in Nebraska. So it's going to affect everywhere differently. But the point is, it's not 5%. It's not 10%. Like, this is a significant drop, right? There's a significant decline occurring. Mm-hmm. And it might be easy to look around right now and say, oh, people are still transacting. Houses are still coming to market. Everything's fine. Everything's not fine. There's significant changes occurring here. And it might not be readily available to everybody. But yeah, that pipeline is definitely drying up in terms of people bringing transactions to market. We're seeing a bit of a recovery, but I think it's gonna take a matter of months to get back up to 2019 levels. I don't necessarily think it's going to snap right back in a couple weeks.
Right. Excellent. Okay. With respect to that recovery ramp, if you will, the question that had come in pre-discussion, I think, is a fair one, and I'd like to bring it forth here for the audience, which is to say that, and I think I understand the destination of where they were trying to go with the question, which is, what are some likely predictions on asset status or health as we work our way through the pandemic? Like the actual question was, what are the potential effects of mass forbearance, right, on both the consumer and possibly the lending world?
You're asking the wrong person. I'm not a mortgage or finance expert, so I'm not really sure. Other than to say, like, we're in a very uncertain situation. There's a 1-2 punch occurring here in terms of the pandemic's effect and the economic effect. As far as beyond that, that's not my area of expertise. So I really have as good a guess as you, Brian.
Hey, again, fair enough. Right. Fair enough. Okay. Well, great. I think, when we think about recovery as well, one of the things that people are looking to understand is, what are some of the indicators or signals that maybe I should be looking for to understand how aggressively to ramp my business? And so, right now you might say, don't go, beat your head against the wall trying to find buyers. But at the same time, we don't want to be so far up that ramp that, we've missed 60, 70, 80% of the recovery before we start to get active. Are there any signals that you think, great agents should be looking for to understand how to best use their time and apply it toward the recovery?
Yeah, I would say this. If you can afford to continue marketing to generate buyer leads, you should, even now. This is the pandemic is a once in a lifetime opportunity. And if you think about market share, there's very few natural or unnatural events that can occur that can cause a significant shift. So this is a discussion that gets talked about a lot with these top portals around the world who might be, number one in a market or number two. The natural inclination is to pull back your spending, right? Conserve cash. You got to be around for the rebound. Let's just stop spending. Why would we spend performance marketing dollars right now when nobody's buying houses? That's the first natural thing. But the second one is, well, geez, this is an opportunity. If my competition has stopped spending money, I have the opportunity to spend money and leapfrog them, right? And that's huge. So I think if I don't want to say the best agent, but just an agent, if you have a great balance sheet and you can afford to continue marketing yourself and spending money to generate buyer leads, like now is a great time to do it. It's a once in a lifetime opportunity to leapfrog any sort of competition. Are people buying houses now? Yeah, but for the most part, it's dropping off. Does that mean they won't be buying houses in 1, 2, 3, 4, 5, 6 months? No, it doesn't. And the value of a lead right now is different. A lead right now might not be somebody who's immediately looking to buy or sell a home. Maybe they want to do it in general in the next 12 months. And they need an expert advisor to help them to hold their hand through the process, to give them an idea, like what the heck is happening to my market. So I think the value of a lead is changing. And if there's an opportunity to continue marketing now, that's a great idea. Just kind of leave it there.
Yeah, and well, that's great advice, because I think that's actually counterintuitive to what most people would think, right? They think that the opportunity is drying up out there, or certainly slowing down to a slow crawl. So maybe I should pull back my spending. And we're saying just the opposite here, which I think is fantastic advice, which is go ahead and start filling up that funnel now. People will get back into the motion of transacting, and you may as well be ready when it happens. So I like that advice. Okay, great. Let's take a moment now to shift a little bit toward the consumer, right? You talk about long-term consumer behaviors and changes in your research. Can you give us any insights or overview with respect to how you think the consumer might change some of its behavior patterns as we motion through and out of this?
I think the short version of this all, and I'll expand, but the short version is the agents and the teams and the brokerages, the businesses that succeed are typically the ones that can best address changing consumer demands, right? So it doesn't matter if it's in a pandemic, it doesn't matter if it's real estate or food or whatever. It's like if consumer demands are changing, then you need to adapt to that, and you need to do it quick, and then you're gonna win. So there's a lot of stuff happening right now. Virtual tours. Everybody's talking about virtual tours. I think it's because people are looking for something to talk about. Frankly, if you can't go into a house, you can do a virtual tour. But For the most part, if you want to buy a house, you need to get from A to B. Like find the house to visit the house. Most people need to visit the house in person. Again, most people. There might be some rich sultan who doesn't need to, visit his 7th vacation home, but most people want to actually see it. So virtual tours is actually just another step on that path. It's not replacing anything, and it's just kind of one more thing. So if that's what people want right now to kind of keep people engaged, think of it as more of a drip campaign for marketing, right? It's just something you can do right now to engage with people. And I think that's great. Like if there's something you can do to engage, that's awesome. In this day and age when people are kind of scared to go outside or they're uncomfortable visiting another house and consumers want the option of a virtual tour, you got to have it, right? You kind of got to have it. It's a consumer demand. I think, will it stick around? Who knows? I think maybe more people will be inclined to use them. And if you're a real estate agent and people want them and you say, no, we don't really do that, then that's a problem. The thing that I'm more interested in is, the less sexy bit of online notary. It's just kind of the mechanics of the transaction. And that's been taken years to get through legislatively. But now through executive order, it's happening like that. You can do online notary. That's a big deal. And I think that's, again, it's not as sexy as the other stuff, but it's the kind of thing where after you do it once, you're like, why? I would just want to sit here and sign my documents in front of my computer. Why do I have to drive to a conference room 30 minutes away downtown with all these other people around? So I think it's things like that probably have a bit more staying power. And it's not consumer demands or consumer needs changing as much as it is like legislative machinery kind of finally getting into gear and approving these activities. And then the last one I'll say is iBuying. I know we'll probably get to that at some point, but just iBuying has an appeal, right? Where you can sell your home with certainty and you don't need to have an open home where you have tons of people looking through it. So that might be an interesting, not consumer change, but maybe just, consumers are more likely to consider that. And that's very much something where an agent still has a role to play, right? This is not either or. The agents, if they're talking to somebody, they want to sell their house and they're really nervous if we're going to go in lockdown again another 2 months, maybe an instant offer on their home makes sense.
Yeah, I think that makes a lot of sense as well. Certainly, one of the things we come to understand about change is that it doesn't have to happen overnight to be significant in our lifetime, right? So, as you were mentioning, just little steps like online notary is huge. I remember something as simple as going from wet signature to digital signature, right, around the transaction of a home. So I think you're right. We're going to see some changes that come out of this that we more than likely see the consumer adopt over time. So thank you. When it comes to the iBuyer, that is an interesting space. I don't want to dwell on it too much, but they seem like they've been a little bit exposed for some weakness in their business model, given the fact that they've really had to hit the pause button on things. Any additional thoughts there?
Yeah, I'll say this, people ask me, are the iBuyers going to make it? I think the iBuying model will make it through this. Zillow in particular is very well capitalized, and it's a powerful add-on for them as a business. Will all the iBuyers make it? I don't know. If they're all sitting on a lot of houses and it's expensive to hold that inventory. I don't think it's company killing. If they can get back to the market in the timeframes we're kind of predicting here, let's say the next 4 weeks, right? If they can start buying and selling houses again in the next 4 weeks, or maybe even 8 weeks, I think they'll be all right. Anything longer than that, if kind of the, proverbial S hits the F here, we have a lot of problems, and the iBuyers will be one of the casualties there. But for the time being, I think if we're on the current trajectory, it'll be all right. And just reinforcing what I said before, I think there are advantages to that model in a world of social distancing, right? If you don't want a couple dozen people touring your home, or if you want to sell your home with certainty, before like what's going to happen in the next 3 months, there's an advantage there. I don't think that's going to double their market share in any markets. I think all the moves here are incremental. This is real estate. It's somebody's biggest transaction. It's hard. It's just a big deal. I don't think we're going to see huge swings of the pendulum. It's going to be incremental. So perhaps iBuying gets a bit of an incremental lift. But this iBuying is a business that was already losing tens, hundreds of millions of dollars a year. This came at the exact wrong time for all of the iBuyers. So it will continue being a business that is losing tens, hundreds of millions of dollars a year. But as long as there's investors around willing to sustain that model, not going anywhere.
I would agree with that. I think they still have many challenges yet before them to really demonstrate that they have a long-term viable model there. But okay, thank you. One of the areas of your report that I really enjoyed probably the most, it was all great stuff, but you were talking about, and you kind of mentioned it with the iBuyers a little bit, survival, right? So you mentioned in the report that the most important strategy for businesses and agents is to make sure that you are around for the rebound. So let's talk about any advice to weather the storm, and maybe speak to any advantages or opportunity that you think may lay ahead for agents. Sure.
Yeah, survival's the name of the game, and it's pretty simple. It's conserving cash, making sure you have enough runway. Because there is a temporary dip, right? We're hitting the pause button, and then there's a recovery, and we don't know how fast the recovery is going to be. But think of that check mark again, right? It could be months. So things will recover. And if you want to be relevant when they recover, whether it's 1 month, 3 months, 6 months, 9 months, you need to be around. Like that's the first step. If you can't afford to pay the bills and you have to lay everybody off and close the door and find another line of business, it doesn't matter. You're not around for the rebound. So, step one is survival. And that's just, and in the report I said, and that's step two. Like there is no step two. It's just, you have to survive. So that's just underlying that foundational importance of that, conserve cash, give yourself a big as runway as you possibly can. And that goes at odds to what I said earlier about, hey, spend marketing dollars now. If you can afford to, it's a great opportunity, but you got to make sure that you got a strong balance sheet and you will be around. So that's the most important thing. The next step of it though is, you hear a lot of analogies, and I think two of my, in terms of what's going on, one of my favorite ones is the halftime whistle. Like that's what's happened, right? We're at halftime. Somebody blew the whistle. Everybody's off the court. Nothing's happening. We're all kind of off the court. Are you going to just be kind of sitting around, kind of twiddling your thumbs, looking at the counting tiles in the ceiling? Or, the good teams kind of get together. They're drinking, they're eating, they're looking over whiteboards of strategies, right? They're plotting, they're planning, they're getting ready because the whistle will blow and everything will resume, right? Everyone will get back on the court. Yes. You want to be the team that's, making the most of this and strategizing and coming up with what to do next. The other analogy is like the race course, around the oval. If you're coming up to a curve, you slow down, you grab the wheel, you kind of focus, you might pass a couple people. But then when you're done with that curve, that's when you hit the gas. You just accelerate. So you want to be the agent or team or brokerage that can accelerate past other people. And that means, what does that mean? That means investing now. Well, everybody's laying people off. What if you're hiring? Right? Well, everybody's cutting their spending. What if you're upping your marketing spending? These are all very easy things for me to say from my office. I don't have a business and I don't pay employees, right? So you got to take it all with a grain of salt. But if you look at, a big real estate behemoth like Zillow, they have a very strong balance sheet. They're conserving cash and getting ready to accelerate. And I think that the companies that will succeed are going to be doing the exact same thing, kind of getting ready, marshaling their troops, investing now so that they can blow past the competition in a couple weeks, a couple months, basically whenever there's an opening, whenever there's an opportunity to get moving.
Yeah, I love that advice. And kind of to your point, if we talk about, think about the major point there, it's go ahead and invest now. And investing doesn't always necessarily mean dollars and cents, to your point. People can invest in time to strategize, time in training, time in education, time in figuring out how to best communicate now with buyers and sellers who, quite frankly, are confused themselves. So I love the thought leadership around, hey, now is the time to invest, and it means more than dollars and cents. So
yeah, and I'll say this, Brian. We like the biggest thing I think a real estate agent can do to prospective clients right now is giving them information. you hear about some agents talking to folks right now who are thinking about selling their home, and a real estate agent gets paid when a home gets sold. So you just traditional thinking, you want to get it listed and then see what happens, right? Hopefully it sells. But you hear stories about agents saying like, oh yeah, list it now. It's a great time to sell. It's like, it's good to just get it up there. It's like, really? Is now a good time to sell? Like, I'm not sure I believe you. I think that might be good for you, but as a homeowner, I'm not quite sure that I'm with you there. So you got to play the long game, right? And the long game is giving people information. We've been actively looking for houses in Boulder in our market for a while. And, the best agents that we interact with, they're just giving us information, kind of like the graphs I showed you. They're saying this is the Boulder market, right? This is the number of closed transactions, which is one thing, but more important, it's a number of new listings coming to market, because that's just showing the general activity. That's incredibly helpful, and being the agent who can go to somebody and say, yeah, Mike, now's not the right time to buy a home. I know that means I'm giving up my commission, but now's not the right time. But, if you're willing to wait 6 months, 9 months, more activity will come on, and then I'll be here to help you. And I think, being as an agent, you want to be the first person that a prospective customer picks up the phone and calls when things are kind of getting back to normal. And the best way to do that is to stay in touch with them. And the best way to stay in touch with people is not pressure them to do something that doesn't make sense. It's just feed them information, because there's a lot of uncertainty in the market right now.
Yeah, that's exactly right. Very well stated. I think that will be a separator in these times between the good agent versus the great agent or the most valuable agent. And it will be their ability to deliver information in very uncertain times to people. The consumers are confused themselves, and what better person and resource than a great agent to step up and help guide them through the thought process themselves. Because many people fear when they get into situations or surroundings or circumstances that bring about fear. What do they tend to do? They tend to freeze right in place. And so the way to kind of thaw out and unfreeze and move again is to bring a plan to them, to bring some scenarios to them. And I think the best agents, to your point, will do that over these times. And again, as you said, play the long game. And everyone, of course, will be better for it. So again, very sage advice. Appreciate that. All right. As we think about the recovery as well, and we think about different business models that are out there, I know there are many brokerage model, business models. What are the agent profiles or business profiles that you would say are well positioned to gain some market share during the rebounding period?
We've talked a little bit about iBuyers. I don't see it as being a huge impact for them. We haven't really talked about discounters or disruptors, companies like Redfin or HomeBay, Hauser, Door. We'll sell your home for 1% commission or $5,000. Mm-hmm. I haven't seen any evidence to support, that they're going to pick up market share. I think, it's kind of irrelevant to what's happening right now. Like, what's happening right now is affecting everybody. It's not singling out buyers or disruptors or big traditional old school brokers. It's affecting everyone. So no, I think it's too early to see, Brian. It's too early to see. I think I just kind of go back to what I said. I think that the models, the companies are going to be the ones that are well capitalized. They have cash, willing to invest, and whether that's time, education, training, or marketing people, whatever it is. But also just having an agility, to them. I can imagine if you're part of this, a giant brokerage or some sort of franchise operation, if you wanted to do something radically new and different, there's probably some bureaucracy that you got to go through, right? Some degree of bureaucracy. So there's an advantage to the independent, and I'm not catering to the audience here, or am I? But there is an advantage to being smaller and independent and having the agility, right? Not only the resources, but the frame of mind and the means to get from A to B really fast. So I think it's kind of hugely advantaged. So if you need to make this gigantic move to react to the market, you can do that with all due haste, and you don't need to wait around for anyone else to approve it or give you the green light to do it. So I think strong balance sheet, investing now, and then agility.
Okay. Excellent. Well, I kind of like that segue into my last thought here that I'd like to put before you, before we open it up to some additional questions that are coming in live for us. But, like you said, agility and independence, right? Side's business model is very unique and quite counter to traditional brokerage paradigms. And, even so-called new model brokerages, if you will, they're really just more of the same with modern clothing. So how do you see the side business model playing out through these times and beyond? I know you spoke to it a little bit, but, when you speak to agility and independence, but is, anything you can speak to there that would lead us to believe that side has a very nice chance of benefiting in these times?
Well, I do think Side has a good chance, and I'm happy about that. And I think it's because it supports the smaller independent brokerages that are looking to be nimble and have some agility. But then also, what I really like about Side is it's not Side, and then call Mike DelPrete. It's the Mike DelPrete team, and it doesn't even say powered by Side, and that's appealing, right? If you think about this kind of market share merry-go-round, whether it's companies like Compass or Realogy Brand or Keller Williams, there's a lot of things shaking up right now. And if you're paying a brokerage fee to somebody, you're going to be looking now more than ever at what you're getting out of that, right? What am I getting? What I'm making this investment. What am I getting out of that? And then what do I have at the end of the day? Am I building my own business, or am I just kind of building somebody else's business? I think what's happening right now is it's just shaking up the industry. Like the snow globe is being shaken, and people are going to start asking those questions. They're going to look around and they're going to say, well, where can I do this? Where can I just build something for myself? And when I'm paying dollars away, am I getting just what I need and not anything more? And is it fairly priced? So I think if I was a top performing agent or team or whatever in any market, I'd be looking at my options. And I think Side has a good option. It's also unique. There's not 7 companies doing this. There's one. So I tell Guy all the time, like, go faster. Like there's an opportunity here. But it's kind of one foot after the other, one step at a time. But no, the model here is good. And if I had to kind of place some bets on companies that will A, be around, and B, be thriving or succeeding, Side and the associated teams and companies underneath it would definitely be on that latter list. And a lot of the usual suspects, not so sure which list they would be on.
Yeah, I appreciate that. And obviously, I'm very biased, right, to the Side model, but I thought I would ask you, given that you see and speak to a lot of different models out there and see the direction that a lot of those business models are headed. So just know we didn't pay Mike to say any of that. We just asked him for his honest opinion. So I appreciate that, Mike. Okay. I know we're coming up close to time here, and I want to make sure that we give plenty of opportunity for those that have joined us live and have some additional questions. So what I'd love to do is I'd love to take a moment to throw it over to Leonie so that she can take us through some of those questions that are coming in live. Leonie, are you there?
I'm here. Hi, everyone. Yeah, we've got some great questions here that are coming through our Q&A. The first one, Mike, is from Alex Wang. He's one of our partner agents here in the Bay Area. And he's asking, given your previous analysis of big box brokerages, how do you think current times will impact the brokerage business as a whole and the role of a real estate agent?
No, good question. So when I think of big brokerages, I think of all the Realogy brands. They're kind of the punching bag of the industry. It's easy to point to them and look at all the things they're doing wrong. And I'm sure I know there's good people over there, doing their best and good teams and all of that. But if I'm a traditional brokerage operating a traditional broker model, things have already been difficult, in the past couple of years, right? Margins are getting squeezed. It's harder to justify your value. You have well-funded companies like Compass willing to outspend you, outpay you, aggressively recruit agents by throwing money at them. So it's a difficult space to be in. I think this just further squeezes them. I don't know how they come out of it. Will they? Yeah. But I don't know how, they gotta be in a cost cutting. If you're Realogy, NRT, whatever, you gotta be looking at your costs really carefully. Like if there's going to be a, whatever it is, 25, 40, 50% drop in transaction volumes, that's a 25 to 50% drop in your revenue, right? When Compass laid off 15% of people, they said, we're assuming we're going to get our revenue projections are going to be cut in half. Like that's a 50% drop. Like that's huge, right? You can't keep everybody around. You can't keep the same offices. You can't pay the same rent. You can't have the same perks. You can't have the same support staff as before. And it's not a couple cuts here, a couple cuts there. It's massive. So that's just going to put further pressure, and it's this downward cycle, right? If you're a Realogy or NRT, and you're going to get less revenue, you have to cut costs. Then you're even, you're a less appealing destination than before because there's less support, less activities. So it's just kind of this downward spiral. And the other part of your question about agents, the role of an agent, I think, is always the same. It's just be the smartest person in the room, right? Be the expert advisor to help people through this transaction. Get all the tools in your toolbox, whether it's iBuying or a concierge, whatever it is, you got all the options, and you help people by giving them information, intelligence, holding their hand, being a sounding board, being an expert. I don't see the pandemic really changing that at all.
Great, wonderful answer. We have one more here from Anthony Margulies. He's, again, our partner agent, but in the Southern California area. He has a few interesting questions here. He says that he loved reading your real estate pandemic guide, and he was curious about, you mentioned Zillow visitor traffic was down approximately 30%, but he had heard that with everyone stuck at home, that the traffic has gone up. Have your stats changed since then?
Yeah, I don't have anything new from Zillow, but yeah, like all those numbers are kind of back up. And this other, there's another U.S. real estate portal that's a private company, so it's not one of the publicly listed three. And they're sharing their stats with me. And last week they had their best week ever. It's so not only has it's not like, just slowly recovering for whatever reason, and I can't explain this. It could be good SEO on their part, but it could be people stuck at home. It's this representative fact of like people are still interested in looking at houses. It's gone up. So traffic is not trending down. Traffic kind of plateaued, and you're right, it is back up. I don't know where Zillow's at, but that matches up what I'm seeing internationally too. In Germany, the Netherlands, UK, traffic dips and then it comes right back up.
Another one from Anthony. Do you believe, as Goldman Sachs is saying, a V curve or W curve, as others are saying?
I'm going to go with checkmark shaped curve. When we're talking about real estate transactions, it's a checkmark. It kind of very severe drop. You're at the bottom for a little bit, not too long, 3 to 4 weeks, and it's this slow, gradual recovery. That's where I'd put my money right now. That's what I'm seeing. That's kind of the data.
Great. I have one here from Jennifer Davidson, and this is one that we see quite a bit going back into, marketing dollars, investing marketing dollars. Do you see anything, or can you give any specific marketing ideas of where you think agents could invest in right now?
I'm no expert. I think, but I'll give you some thoughts. Continuing to put yourself front and center in terms of prospective buyers and sellers. So whatever kind of lead gen channels are successful or have been positive in the past, continuing to invest there, to kind of not pulling back. Investing in things like, you got to have intelligence and data. So investing around that, and it's got to be the right way. Like, data, one of my favorite books is How to Lie with Statistics. And you can tell any story you want with numbers, right? And you can feed people's biases or not. Like, it's a real science and an art form. Investing around getting good market data. And that might be paying somebody to get the data, and then it might be paying somebody else to do something with the data. And it could be anything from graphic design to just some sort of data analyst who can kind of display it in the right, best, easy to understand format. Yeah, I think those are the two big things, and then the third would be anything else your customers are demanding. If your prospective clients just won't shut up about Matterport tours, and like buy a Matterport camera and do it. You just got to respond to whatever your customers want.
Great. Have you been tracking the rental market, as we are seeing a big pickup in rental inventory compared to sales inventory?
No, I haven't been directly tracking it.
Okay. Is there data on pending listings since shelter in place for the same cities that we saw on the acting listings graphs?
There is. I've been ignoring it, but it does exist, and you can find it, through your local MLS or anything like that. There's like a fire, and the reason I have is there's a fire hose of data kind of pointed right at me, and I got to be really selective in terms of what I look at, what I pay attention to. And for better or worse, I've chosen new listings. But you can look at other things like pending and whatnot. It's just, I don't know, it hasn't really tickled my fancy as a thing to put front and center.
Victoria Nichols, she's asking, do you think that certain areas will be hit worse, and which ones?
Yeah, that's been really interesting. The U.S. markets that have been hit the worst, the first would be New York City, Seattle, and the Bay Area. They were hit first, and they were hit big, and there were significant lockdown measures put in place. And the drops there reflect that. Like New York, kind of 90% drop in new listings for 5 weeks. I mean, it's just unprecedented, right? Seattle and the Bay Area, kind of anywhere from 50 to 70% drops, but then a recovery. The other markets would be, so it correlates to essential versus non-essential and the severity of lockdown. So Michigan and Pennsylvania have kind of deemed real estate to be non-essential. So if you look at the stats out of Detroit and Pittsburgh, they're brutal. Like they're just, down 70% as well. Then your other, everywhere else, it's really interesting. Markets like Austin or Portland, like never really hit super hard. There were lockdowns, but it wasn't crazy. They haven't seen the same drop, but what you're seeing is kind of this lack of seasonal increase. So they're affected, but they're just being affected differently. And I think that's what we'll see in a lot of other markets out there is there will be affected, but it'll just be more maybe consumer psychology. Like, I'm a little concerned about, bringing my home to market right now. I want a little bit more certainty in my life and what's going on in the community before I decide to sell my home. I think that's what we'll see more than anything. So I don't expect, Omaha to drop 90%. I think all these other markets will see some impact, but it won't be as severe as what we've seen to date.
Wonderful. Thank you for that answer. I have one more here from Daniel Risman-Jones. He's asking, do you think VCs will be investing more or less in prop tech in the coming months and years?
More, but at worse valuations. VCs are renegotiating term sheets. Like if there was a fundraising in process right now, if I thought your company was worth 100 million before, well, now it's going to be at a 70 million valuation or whatever those numbers are. There's still VC money. Full disclosure, I do consulting. I work with VCs. I work with companies looking to make acquisitions. We're still looking, it's still active. It's the check mark as well. It's like, let's just say, like, let's hold off for a month, but let's kind of keep looking, and we'll ramp that up over time. Fact of the matter is, before this started, there was more venture capital than there were good ideas to invest in. And nothing's changed. That's still true. So there's just more money than there are companies to invest in. So I don't see that changing. I don't see it changing. I think it's slowed down a bit, but you're still going to see people come into the party. And, as much as I was just saying this, get ready to invest in the downturn, VCs are looking at the same thing. They're like, or private companies looking to make M&A activity. What can we invest in? And one way to do that is investing or buying other companies. So I think, I don't think that has gone away. Well, it's still here.
Great. Are you tracking any data from lenders, both domestic and international, about demand for new mortgage pre-approvals? And if so, what does it say about buyer demand levels?
It's a great question. I wish I had an answer. I'm not tracking that.
Okay. There is one other here from Anthony. He really enjoyed your Compass report you did a while back. And he's curious if there are any updates on Compass. And if you read Ben Walsh deep dive into Compass yesterday in Daily Barron Stock Market and Business Report.
I think, yeah, the Barron story, I was quoted in there, and I talked to the reporter quite extensively. It was a bit of a hit piece, to be honest, but, so be it. Yeah, I've been interested in Compass. I mean, I think 2020, before all this happened, Compass had a particular set of challenges, and now after this has happened, they have another particular set of challenges. They definitely have a target on their back. People love a good story, and they like to see the rise and fall, especially the fall of companies. SoftBank as an investor, this whole WeWork fiasco is definitely weighing heavily on them from a narrative standpoint more than anything. SoftBank invested in WeWork and it blew up. SoftBank invested in Compass. Will it blow up? I think, yeah, Compass has there's a couple things that are going to come around for Compass pretty soon in the next 12 months for sure. And it should be no surprise. A lot of it is financial, right? How much cash do they have in the bank? What's their valuation? For agents that have equity in the business, is it worth anything based on the valuation? Those sweetheart deals where you get 100% commission split or 95, first year's free, whatever, all those sweetheart deals, those can't last forever. They have to expire. And guess what? If they're expiring now, what do you think that Compass agent's going to do? They're taking off. So I think there's a lot of significant challenges. I would not say that, like Side, the pandemic has kind of put Compass in a better position. I think it's just, yet again, another challenge that they're facing, adding to the challenges that were already kind of ahead of them. So I don't think it's going to blow up, but it's just, it's kind of more weight on the scale of like difficult things they need to overcome.
Interesting. I have one here, kind of maybe a softball. Do you have interesting tech tool advice instead of virtual tours?
No.
No.
I'll tell you this, we're looking for houses. We did a virtual tour the other day, and I use the term loosely. It was the equivalent of the Ken Burns effect on photos. And it in fact made the layout of the house even more confusing and did not solve any answers. So maybe I'll use the softball as an opportunity to say, virtual tours it's 2 words, but it can be many different things. Be careful about that, right? Like, you got to do a good job and think about what you're trying to do, how you're doing it. There's tech vendors that'll help you. There's portals like Zillow that have tools. Like, there's a lot of stuff out there. They're not all created equal. And you could actually do virtual tours, implement it poorly, like what I experienced, and it's bad. You would be better off doing nothing. So just because you can doesn't mean you should. And if you are going to do it right. Don't just do it, because if you do it poorly, it'll, it's a liability for you.
Very good. One more here from Daniel. When do you think international buyers will be back in the U.S., especially California market?
No idea. I mean, I don't even know when I'm going to be able to go out and get my hair cut again. So one step at a time.
I have a couple of comments here that I just want to read from David. For us to protect ourselves as experts, we like to project certainty and knowledge. Maybe now admitting to uncertainty and flexibility is the better posture with clients and prospects. Thoughts?
Yeah, I like that. I mean, vulnerability is a great attribute to have. I think, now more than ever, being open and honest with folks, not that you shouldn't be, but, just being open and honest about the uncertainty and saying, kind of like what I am on the call. Like, I can tell you what's happened to now, and I can project out maybe a couple days or a week, but that's it. I don't know. I'm an expert in the space, but I just don't know. And I think anybody who says they do is clearly full of it. So yeah, like just be honest and tell people as much as you know, and tell them when you don't know something either.
That's fair. These are all the questions that we've had, so I'll turn it over back to you guys for any closing thoughts. Thank you so much.
Awesome. Thank you.
Fantastic. All right. Well, let's see, Mike, is there anything in closing you'd like to say before I wrap up here?
I don't think so. It's been fun. Things are changing on a day-to-day basis. There's a lot of data coming in. I guess keep an open mind. That's what I would say. Just keep an open mind. There's a lot of new information and new intelligence, and things are changing on a pretty regular basis. Don't suffer from confirmation bias where you're just trying to reinforce what you already think. Just get out there and be open to learning and seeing. And in a situation like this, there's a lot to learn because it's affecting everywhere differently. So you can kind of get a sense as to what might come by looking around and absorbing information. So yeah, keep an open mind.
Great, fantastic. So as I think about what we've talked about here today, some of the major points that certainly stand out are keep an open mind, invest, right? Invest beyond the dollar, invest in strategy, invest in education, invest in training. And the third takeaway I'd say that came through very clear today was let's be out there for our consumers. It is a challenging time, and anything that you can do to arm them with information to put them a little more at ease around what's going on and let them know that you're that trusted provider is a great thing to be doing. So fantastic. All right. I want to thank our audience again for joining us here today. Very specifically, I never want to miss an opportunity to thank all of our side partners behind their unique and awesome brands for providing the highest level of service and guidance and expertise to the consumer and the communities that they serve every day. And finally, I want to thank our very special guest, Mike DelPrete, for giving us his time and sharing his research and insights. We're all better for it. So I want to encourage you to go check out his work and his documentation that he presented with us here today. Thank you.
Thanks, everyone. Take care.
You got it. Take care.